Morning, everyone. So it's that time of the month again when Zoopla releases its UK house price index, and it's always a great insight because it gives the previous month's facts and figures in regards to demand, house price growth, supply, and it goes into a lot more detail. So we have to look behind the numbers just to see exactly where things are going and where we see things over the next 6 months, 12 months, 18 months, and so on. So let's go for the overall summary to start off with. We can see here that buyer demand has moderated. We're going to come on to that in a bit more depth later. But buyer demand has moderated as stamp duty holiday ends. However, it still remains elevated in comparison to normal market conditions. Now, there's other factors that affect that. Again, we're going to go into a bit more detail in that in a couple of minutes or so. Search for space is still there. What we're noticing is if you've people that typically will be buying apartments when they've got one or two young children, they are looking for the garden space. However, the younger demographic, which is what we say is the best rentable demographic, they're actually looking for outside space within the apartment. So, for example, if it's close to a park or if it has roof gardens, balcony is actually not as in demand as people think it is, because typically, more often than not, we don't have those glorious sunny mornings like they do in Europe where you can sit on the balcony and have a coffee. So a balcony is not actually as in demand. And what typically you see, anyone that does have a balcony, it starts off great. You sit there in the first few mornings and have your teas and your coffees in the morning. And in the end, you put a clothes horse on it or a bike. That's how they typically end up. So what we'd say to people is don't be too focused on having outside space as a balcony, but look for things that are close to parks or easily accessible to parks, not just slap bang in the middle where literally there's nothing around. That's not what people are looking for. We've got a few developments that we're launching and have completed already, actually, where they've got outside space in terms of roof gardens, communal areas, and they're really key. They're proving really popular with tenants. So space is definitely something that people are looking for. The total stock of homes, now this is key. The total stock of homes for sale is really constrained. It's down 24%. Now that's huge. There's a combination of factors. First of all, we've obviously had new homes slow down. It's a lot more difficult to build things at speed over the last sort of 12 months than in previous years, simply due to social guidelines. There was certain rules and regulations which I'm sure weren't followed, but rules and regulations where if you used a tool, you had to then wipe that tool down, place it in a holding box, then the next person could come along, keep your distance. Again, the practicality of that on a construction site is pretty impossible. So I'm sure it wasn't followed, but again, it did slow things down. And of course, right at the beginning of the first lockdown in sort of March, April 2020, the construction industry didn't know what direction it could go in. So everyone down tools. So there was a big lag from that particular period. And on top of that, we had Brexit to the mix because getting goods into the country has been a little bit tougher. So it's not only Brexit, but a slowdown from getting goods in due to COVID. It's made things tougher to get materials. So, for example, at one point there was a plaster shortage. So little bits and pieces like that have made things a lot slower for new build homes. That's one reason why the stock of homes remains restricted. The second reason is a lot of people who potentially would be putting their properties on the market don't want to have viewings. They don't want to have people walking in and out of their house due to COVID. So they've decided to restrict people either coming in or not putting their homes on at all. And they'll do so when they feel that the time's right. So that's why the supply of property and the supply of stock has actually decreased. Now that's meant that it's basic economics, demand and supply. That means that if supply is increasing, demand's decreasing, hence the price goes up. So that's why we can see here annual house price increase growth is at 4.7%, up from 2.2% a year ago. And again, the amount of price growth over the last year, it puts 1.8 million homes into a higher stamp duty bracket. So this is a key graph here. You can see demand at 25.6% or up 25.6%. The number of sales agreed up 22.2%, but the actual flow of stock or the stock of homes for sale is down 23.6%. So that's the key. That's why we're seeing what we're seeing. As we scroll down, this is another sort of key graph just here. you can see obviously what the property prices have done. So if you look at the dotted lines, the dotted bar charts, that's the property price in these particular areas over the last decade, from 2011 to 2021. So you can see London obviously leads the way. It's always the way. This is why when a lot of people say, oh, I don't want to buy city centres, you're always going to find city centres will outperform the outskirts. So you've got London is the best performing market over the last decade. Now it's obviously having a bit of a time at the moment where we're seeing house prices dip. But again, that's simply, or slow down, I should say, that's simply because the house price has gone up so much in London that they become unaffordable. And if we look at the range here, what your household income needs to be, if you're buying in London, you need your household income to be around about the 93 to 100,000 mark. And again, that's the average house price in London. That's not even including the sort of top end stuff. But you can see the spread of house price growth across the country continues to widen. And here's the key. Again, we've been really pushing Liverpool and Manchester over the past sort of 4 or 5 years plus. And again, they continue to record the highest level of price growth among the largest cities. So anyone that got on with us sort of 4 or 5 years ago is really having a good time of it at the moment. There's no reason to sell. Things are still pushing on nicely. It's typically the best place to put your money in terms of your growth and income combined. So the majority of people are keeping their properties. And again, they're really reaping the rewards of getting in early stages. It doesn't mean that it's too late to get in. It just simply means that you're not going to make what you would have made 5 years ago, but that doesn't mean that you don't invest at all. It means that you plan for the next 5 years. But as you can see, Liverpool and Manchester have had great growth, 7.9 and 7.2% respectively. Then we come up to sort of like, homes moving up stamp duty bands. Now, this is key because if you're buying properties that are sort of 450 to 500,000 and they start to increase over that 500,000 mark, it's going to be a dramatic change in the bands. So what we look at is the average home price that we look at is around about the 220 mark, some a bit more, some a bit less. And that's really the key because we're not seeing things jump in bands. So when we look at the resale value, which is key, we're not going to see people put off by the fact that they've got to pay 15 to 20,000 in stamp duty. A bit different in London, but on Liverpool or Manchester, we certainly don't want to be looking at £400,000 or £500,000 properties. Then we come down, and what we spoke about earlier, the demand remains moderate but elevated. Now, this is key. So it spiked in April. So if we look at this graph at the bottom, you can see it spiked in April. The reason being is people thought that if they bought by April, they could still beat the stamp duty cut-off point. So that's why it spiked. And then, of course, we've seen a dip because people know that if they're looking now and they're buying now, they can't actually beat that stamp duty cut-off. So that's why at this point here in March and April, it peaked just to basically beat that particular stamp duty cut-off. Now, what I expect to see is I don't expect to see us dip into previous levels that we saw back in 19. Of course, these are the first lockdown levels back just here. But I don't expect us to dip back down here. The reason being is I still feel that there's this mentality that people want to move. They typically won't be put off. If you've done all the legwork, you've spoke to a mortgage broker, you've paid a mortgage broker, you've paid solicitors, they're not going to suddenly dip and say, you know what, we're not going to do it because we've got to pay an extra £3,000 to £5,000 stamp duty. They'll carry on with the transaction because they're seeing house prices increase. So they're thinking, well, actually, it might be an extra 5,000, but my house price could go up 5 to 10% over the next sort of couple of years anyway. So they'll carry on with the transaction. Where I expect this to continue and why I expect it to continue is the 5% to 95% mortgages. And that's where we've got new buyers coming in, first-time buyers, and I expect them to be the next push on the market, and that will be like a domino effect as well. So I expect this to continue around about the level that we're seeing now. And then, of course, the speed that things are selling. We're seeing homes sell quicker than ever before. Back in a couple of years ago, 2019, you can see the average was 42 days. We're now looking at 22 days, which is phenomenal. It's really, really quick the way things are going. So it really is a seller's market. So we have a lot of people come in and we bid on properties. Of course, we'll always take that bid to the developer, but people have to understand that it is a seller's market at the moment. And then we come down to, the city guide. Again, what we've stated before, again, Aberdeen right at the bottom again, still decreasing in terms of price. But what we're looking at are the key cities here. So we've got Liverpool at 7.9%. We've got Manchester at 7.2%. And again, it is the northern cities that lead the way: Sheffield, Nottingham, Leeds, Leicester, Birmingham. So all of those particular cities that we've recommended over the years are really starting to come into their own. So we're still advocating those areas. Again, it doesn't mean you don't buy in other areas. It doesn't mean you don't get London. There are still pockets of great deals to be had. Just got to make sure that we find those deals. So overall, property market is looking solid. It's definitely something that we are saying, look, there's still room for growth. There's a lot of people thought back in sort of 17, 18, 19 that the growth had been had. One of the biggest fears that we heard at the time was when we recommended Manchester. They thought, well, no, the growth has already been done there. But we've seen it jump sort of 20, 25% since those particular days. And Manchester's had a great run over the last sort of 5, 6, 7 years or so. So there's still growth to be had. But of course, what we're looking at as well is some nice solid income in those areas. So if you're still looking and you still want some pockets of good deals, feel free to get in contact and have a great rest of the week.